Ah, what's up, Matt?
How's it going? Are we live?
Yes, we are, man. How are you doing?
Awesome. I have a question. Can you just see here or can you see out to like here?
Sorry, hold on a second. I'm having technical difficulties.
It's all good.
P000 disconnected.
There we go. Can you hear me all right?
Perfect. Yes, sir. We got Chuck the contractor.
And Matt Beans.
The Matthews.
Cool, dude. So we didn't really like do a whole bunch of planning or anything, but that's just kind of how we roll sometimes. So did you have a kind of an idea of what you're going to present, or do you want to just talk through some things?
I have a question. Is anybody else live? Do we have like we're live with the audience? Can we see questions, stuff like that?
Yes, Roman, what are we looking like?
We are super live.
Roman says we're super live.
We're super live. Awesome. So it sounds like Roman is backstage. So Roman, if you get questions, just interrupt us and fire away.
Yep. So I'll keep an eye on the questions too, and we can let them stack up a little bit if you're presenting some stuff, and then I have some questions. Roman has some questions. So yeah.
Awesome. So I want to start with like the business of being a contractor, and my background is actually in real estate investing. So beyond doing the contracting, doing the work, hiring subcontractors, handling materials, labor, I was also dealing with acquiring construction loans, dealing with principal and interest loans, or interest payments. Just not beyond running a construction company, also flipping the houses, acquiring all those financials, having investors, doing all of that. So that is call it the stage that I speak from. And we had a lot of difficulties, man. Like when I was getting started, I remember like 22, 23 years old, looked at my balance sheet. I was like $750,000 in debt. And so that was nothing to be taken lightly. And I just made a list of all of the problems, and it included, paying contractors on time. And it's easy to say, oh, I pay all my contractors on time. But do you do it in a streamlined process where it's like, you hire somebody, they get done on a Tuesday, they won't pay Tuesday night. Then somebody else finishes Wednesday, they won't pay Wednesday night. And you got somebody else that's willing to wait till Friday. And it's like there's no structure to the way that a lot of these guys are paid, especially if they're a guy working from a truck, which that's a lot of our subcontractors, right?
Mm-hmm.
So that was a huge problem. Handling multiple jobs at one time, right? What job is this person working at? What job do these materials get paid to? And then just in general, doing the administrative work of keeping track of, are we profitable on jobs, and not just saying, oh, we spent $57,000 in materials, we paid $50,000 in labor, and we made $120,000 in income. Did we make money? Yes. Cool. How much money did we allocate for taxes at the end of the year? So then tax time comes and it's like, oh, everybody's celebrating Christmas, and all that's looming in the back of your head is, shit, I got to talk to my CPA, right? Can I actually afford this Christmas? Like, I know we made money. I know there's money in the bank account, but just like last year and the year before, I'm going to get slammed with another tax bill come 2 months from now. So, these are all problems that we all experience in the construction industry. And what I'm going to show is basically it's half of the system that I use to simplify it. And the reason why I'm showing this half is because the other half is super administrative, right? The other half is using QuickBooks and the way that QuickBooks is structured, which we can cover that a little bit. But I want to give something that somebody could actually implement, like in the next 30 days. It's going to simplify their life substantially. It's going to build a framework and a foundation to set up the QuickBooks correctly, to be able to hire an administrator. Because Chuck, you'll probably agree with me, part of the problem is, we want to hire somebody with administrative, but in order to hire somebody, let's say we've tried hiring them and then we realize this job isn't created. I have to now create the job, and then I have to create access to logins and figure out how to do all this stuff. So there's this daunting task when we hire somebody to do the administrative work, that it's not organized enough for somebody to come in and work at a wage that we want them to, right? We could pay a professional to come in for $50 to $100 an hour. They can create the whole job, clean it up, and be an absolute badass. But a lot of us can't afford that in the construction industry, right? We need to pay somebody $30,000 to $45,000 a year, and that person just needs to be told what to do and how to do it and when to do it, and that's the person we're looking for.
Yeah. I think just for some context about my audience, I talk to a lot of them, and there's a lot of owner operators, and there's a lot of guys that come from the trade side who are new to the business side. And so there's a big element of not knowing like what even exists. Like, what do you use to do invoices and estimates? Some people don't know that there's like bookkeeping software that will send an invoice, and when it gets paid via credit card, it's automatically put back into your system. And so I think that'd be something cool to keep in mind, is like, you don't know what you don't know. And so getting a good mind map of just like what there is to keep track of, and how people are keeping track of this stuff who've been doing it for a long time and do have systems. I think that's where you could add a lot of value of not just like how to do it, but like, what even should I keep track of? What should I pay attention to? And we all need to know our numbers when it comes time to pay Uncle Sam, but what numbers do we need to look at to understand our own business and be able to hire people? So I think that'd be cool.
Awesome. Yeah, absolutely. So let's start with administrative work and bookkeeping, right? Let's call it the business side of construction, right? This isn't going out and swinging hammers. This isn't meeting with people in your sales skills. This isn't where to source vendors. It's not how to hire contractors, right? This is like the running the business side of things. So we've been throwing this word around, and it's bookkeeping, right? And a lot of people don't even know what that means. So bookkeeping is simply the day-to-day tracking of the numbers, right? It is the most basic form of accounting, right? And so bookkeeping means, okay, you charged a card $100. Was that $100 for materials? Was it for labor? Was it for rent? Was it for insurance? What category was that $100 for? Okay. Let's say if it's anything, and there's two in construction, in your construction business, there's two sides of the story for any expenses. Okay. It's just general overhead expenses, which is going to be your rent. It's going to be your administrative payroll. It's going to be your builder's insurance or whatever type of liability insurance you have. It's going to be your truck payment if you have a truck, right? Something that's not directly tied to a project, but it's required for the overall functioning of a business, right? So that's going to be overhead. And then you're going to have construction cost or project costs. And those are going to be your labor and materials. If you have a construction loan, that's going to be, the interest, that's going to be any finance fees, your origination fees from acquiring the loan, any interest that's paid for the duration of the loan. If you got some sort of builder's insurance on that specific property, right? Those types of things that are directly tied to the property or project, those are direct expenses. Okay. And then we've got income, right? Revenue. And I don't even want to call it, honestly, I don't even want to call it income or revenue. I want to call it money coming in. And the reason why I want to call it money coming in is because not all money that comes into our organization is income, right? For example, some builders get into the business of spec building. They get into the business of buying a property and doing the renovations. I don't know what percentage of your audience that is, but a loan, when you get a loan to acquire a piece of real estate, and then you get the draw to reimburse you for your expenses, that is not income, right? That is money in, it increases your loan balance. So bookkeeping handles all of this, right? So you've got money out. Is that an expense? What category is that expense to? Is it overhead, or is it a direct cost of the project? And then what subcategory? Then you've got money in. Is that a loan draw? Is that income from doing a project where a customer pays you? Is that a refund or a rebate on a tool or something that you bought? So that is bookkeeping. Bookkeeping is taking money in and money out and putting it to the correct category. Okay.
Mhm.
It's very different from accounting. Your accountant is going to be the person that, like you hear a CPA, an accountant. That's going to be the person that maybe does some strategy around like how the accounting and the bookkeeping should look, right? That's, what are we going to do to save on taxes? That's filing your taxes. That's maybe an accountant can play a CFO role and they can look at your P&L and your balance sheet to strategize like, hey, maybe we should do this or that, or we're overspending here, underspending there, being a little bit strategic. So that's bookkeeping in a nutshell.
So like for somebody who's just like owner operator, let's just assume that the person who's doing the work is also the one responsible for bookkeeping at the smallest scale. Like, what are your recommendations as far as how to track things, when to track things, tools to use?
Perfect. So if you're owner operator and we're assuming no employees, maybe an assistant here or there.
Yeah, maybe some help occasionally.
Yeah. So your owner operator realistically is going to be at any given time doing 3 projects ish at a time, right? So I would, if you're at that stage, and I'm going to lay some groundwork and put a frame around who we're talking about. Okay. If your job or if your goal is to just stay there, like, dude, like my dad has a painting company and he just wants it to be him and 2 other dudes and they just paint one house a weekend and that's all they want, right? He's not trying to grow a company. He's not trying to grow a business. And in that scenario, like, I don't know that accounting and bookkeeping and all this nonsense administrative work is like worth it. So if we're talking about that guy, right?
Mm-hmm.
But you're still liable for taxes. You still have to show income because you want to buy a house or a truck or whatever the situation is. That's what I want to show you here. And what we're about to look at is the exact same framework that needs to be applied at a bigger scale, right? This is something super fundamental that needs to be implemented with your 1 to 2 man show that doesn't require bookkeeping and hours of accounting and softwares and all this stuff. This is totally free. It's the proper way to run a business. It's something that we use. So I also have a bookkeeping business for real estate investors and contractors. This is a system that we implement into all of our clients' books before we start working with them, because if it's not set up like this, we won't touch them.
Mm-hmm.
Cool. So I'm going to do a screen share. Let's do this one. Awesome. Can you see this flow chart?
Yep, I can see it.
Awesome. So this is what I call the money IQ flow chart. Okay. I'm going to explain it, but we're going to break it down like piece by piece. Okay. So just looking at it, what you see is a bunch of pigs with words inside of them. Those pigs are quote unquote piggy banks represented on this diagram. And what those represent in real life, what they're the placeholder for, is individual bank accounts. Okay. And I want to be very clear about what a bank account is and what I'm referring to. It is a business bank account. It is a bank account that is tied to the EIN number of your business, regardless if it's an LLC, an S Corp, a corporation, PLLC, regardless of what type of entity that you have. That's what we're talking about. Okay. I'm not talking about personal bank accounts. Okay. There's no reason why my business should ever use money, should never come into my personal Matt Beans bank account that I pay for my personal groceries for into the business, and expenses for the business should never come out of my personal bank account. Okay. That's number one. And I think that most contractors at the 1 to 2 man show completely screw that up. And that is number one, like, go open a business bank account.
So on your diagram, you've got like bank one, bank two. So on this example, is there's two bank accounts, but you're just kind of dividing up what's in there?
Nope. So, okay. So
Nope.
every single piggy bank is an individual bank account.
Okay.
Okay. So in this in this, can you see my mouse?
Yeah.
Okay, cool. So we've got the income account is a bank account, OpEx, which is short for operating expenses, 2, owner's comp, 3, tax, 4, profit, 5, and then we've got another tax and profit. We've got 7, and then we've got this floater account down here. So we have 8 bank accounts in this situation.
Are
Okay.
these checking accounts?
These are all checking accounts.
Okay.
Yep. There are 2 of them that can be savings accounts, and these are special accounts. We'll go over these last. These are these second tax and profit accounts. Those can be savings accounts. That's totally fine. Cool. So what's going on just fundamentally here, just at a super high level, and then we'll go deeper and deeper, is these are customers with money that pay you for a product, a service, whatever the case is. In this situation, it's usually your construction service, and it goes into a single bank account where all money goes into, which is your income account. Okay. And then we're going to take the money from that income account, and based on certain percentages, we're going to move that money into the 4 areas of business that are all super important to you as a business owner. As the CEO of your business, these are your 4 responsibilities. That's 1, paying your bills and payroll. 2, paying yourself as the owner. 3, paying your taxes, paying Uncle Sam, paying the state, the federal government. And then 4, paying the shareholders of your company profit. Those are your 4 responsibilities as a business owner. Number 5 is you either have a rainy day fund, an oh crap fund, which we can get into that, or you have an expansion fund or a growth fund or an acquisition fund. Like, for example, if you want to buy a piece of heavy equipment, maybe you take a little bit of that income every single month or week, every time you get paid, and you put some money in here. And after 6 months, a year, whatever the projection is, hey, I've got $35,000 and I can go buy me a skid steer, or I can go buy me a Mini X, or I can do a down payment on go into an office building and have a lease and have a yard, and maybe I can buy some dumpsters to do trash apps. So that's one way, is a growth or an acquisition account. But we can get into more strategies on that. It's kind of advanced. I actually 50-50 if I'd rather have it on here or not, but I like to have it on here because it always comes up as a question, like, well, what if this? It's like, well, that's what that bank account's for. So that's fundamentally what's happening. People pay you, your customers pay you, goes into the income account, gets distributed into the 4 areas that you're responsible for as the CEO of your company, and then those ultimately end up where they need to go.
So when do you do that? When do you divvy up this cash?
Before I answer that, I want to tell you why we use this strategy. Because, like you've already mentioned, how many of your audience, customers, contractors have QuickBooks set up? How many of them know how to read a P&L? How many of them know how to read a balance sheet? Probably statistically 2% of them, like statistically. So how are they checking if they have money?
I don't know.
How,
Looking in their bank account, I guess.
They're pulling up their phone and they're looking at their bank account, right?
Mm-hmm.
But when you have a single bank account and you're responsible for all 4 categories of these area, or all 4 of these areas, and you've got 30 grand in the bank account, well, how much of that is allocated to OpEx? How much of that do you owe taxes at the end of the year? How much of that can you go sign a lease for and do a build out either in a yard or in an office space? How much of that can you put towards inventory to buy in bulk and get your 40-50% discount and actually hold inventory, right, without putting yourself in a pickle in the next 60 to 90 days? We don't know. Like, that's the honest truth. It's like, we don't know because we're looking at a single bank account with one number. So we use multiple bank accounts. It's like the Dave Ramsey envelope method, right? We're using multiple envelopes to say, this is for this, this is for this, this is for this, and this is for this. And it's the same exact habit. I'm just going to open my phone app and look how much money I have in my bank account. So that's why we're doing this. So your question was, when does this happen? It depends on the cadence of your business, right? It depends on how quickly bills are due, how much money's flowing. I would say at minimum once a month, at maximum once a week. For most businesses, every 2 weeks is fine. Okay, and we're going to call that allocation day. So on allocation day, you're going to clear the income account to zero, flat zero, and you're going to put your percentage into each one of these. Okay, and then I would say allocation day should probably be like a Wednesday, so that way the money can transfer, and then you ideally have your bill set up to pay on Friday, right? You make payroll Friday, you pay your credit cards off Friday, you pay rents or cut the rent check or whatever the case is on Fridays. So I would do allocation day Wednesday and then do all this other stuff on Friday. Cool. So let's go further down the line. Okay. So we've cleared our income account and we've put money into OPEX, owner's comp, tax, and profit. OPEX is simple, dude. OPEX is like, this is what it takes to run the company. We're going to pay our marketing. We're going to pay Chuck to do our marketing. We're going to make our payroll. We're going to cut our payroll checks. We're going to pay our rent. We're going to pay our insurance, right? Like that's what that account is for. Owner's comp is for you, right? This is the amount of money that you are paid as the operator of the business, okay? Not as the owner of the business, as the operator of the business. If this business independently were to hire somebody to run the show as the operator, that is you, the contractor, and this is what you're getting paid, okay? And I'm actually going to skip tax for a second because that one's super self-explanatory, but profit is completely different. Profit is a different hat than the owners. Profit is the shareholders of the company. You might be in our scenario that we're talking about so far, you're the operator and the shareholder, okay? But the shareholder of the company is an investor in the company and they want to see an ROI. Would you not like to see yourself put 5, 10, 20, 50, $100,000 into a company and then get paid as a shareholder? As the operator of the company, that is your job, is to pay your shareholders, even if that's you, okay? So we're going to take that percentage of profit and we're going to put it into this first bank account, which all of these before this dotted line are at the same banking institution, okay? Let's call it Chase. So all these bank accounts are at Chase. Immediately, that money is moved to a separate banking institution, to bank 2, to a separate bank account. And the reason for that is because when you open your Chase app to see how much money you have, that profit is gone, right? It's in a storage account somewhere at a different bank that you cannot access from your phone. You're not making your business decisions based off of it, right? You're making your business decisions based on the operating expense and the owner's comp in your company. The tax and the profit is allocated for your shareholders and your taxes that are due once a quarter or once a year. So that money's gone, okay? It's out of sight, out of mind. And then you get paid as a shareholder. All right, Matt, so why do I want to get paid as a shareholder and as owner's comp on a W-2? If you're a small independent contractor, the best way for you to have your business structured is taxed as an S Corp, which means that you need to pay yourself a reasonable wage on W-2 as an employee. That's owner's comp, okay? So whatever makes sense for your company that's reasonable, and I would talk to your accountant, your CPA for this, or maybe other leading industry professionals, somebody, to figure out what that is. Profit is taxed differently than your W-2 income, right? You don't need to pay FICA. You don't need to pay all the other acronyms and whatever employment taxes that employees need to pay, right? This is strictly investor dividend income. So it's taxed differently at a lower rate without all the other nonsense that's on your W-2. So it'll actually save you money to do this. And you'll be compliant with the law. Tax is the same thing. We're going to allocate that percentage to tax and then move it to our storage account. It can be at the same institution as this profit account. But again, out of sight, out of mind. We don't want to have a scenario where we owe Uncle Sam $50,000 in February, but we decided to take on extra projects, sign a lease, do a build out, buy some tools, hire another person, give them a bonus, do all this stuff, buy a truck, buy a trailer, buy a heavy equipment, and then I only have $25,000 in my bank account, but that's plenty of money. Or I have $75,000 in my bank account. Okay, so write a check for $50,000. Now I have $25,000, but I was banking on finishing these jobs and buying materials and all this stuff with $75,000. Now I'm down to $25,000. Now I'm in a pickle. Now I'm stressed. Now I'm arguing with my wife because she sees the bank accounts, and you know what I mean? Like, it avoids all of that. We don't want any of that in our lives. Okay, that was a lot. Any questions?
Let's see. So cost of goods sold, that comes out of operating expenses.
Yes, materials. Okay, as a contractor, the pinnacle best way to run jobs is to have either separate credit cards or separate bank accounts for each project that you're doing. It is a lot more work and a lot more tedious. But if you've got like 5 different jobs going on, that is the best way to do it, right? Where we have one
That's
card.
For big jobs, though, right? Like you're talking about like remodels and home builds.
Like if you're doing, if you're that's the best way to do it. If you're running your like a AC contractor or something like that, plumbing company, and it's like a, I don't know, $10,000, $15,000, $20,000 job, it's fine if it all runs out of one single bank account, right? So that's the way that I would set that up. Anything to run the job or to overhead or direct expenses comes out of OpEx. That is correct.
Do you recommend using credit cards?
Credit cards can be a blessing and they can be a curse. If you are disciplined, yes, credit cards are fantastic. You can get, your 3% cash back. You can get flying points. There's a tons of perks with credit cards. The downside of credit cards is if you don't make your payment, you're going to get charged 18, 24, 29% interest on them. So if you're undisciplined and you don't have a process or a system to pay them off in time, it will bankrupt your company. You will go find another job. You will be miserable. You will be broke. Mm-hmm. If you are extremely disciplined with them, and there is no middle ground, there's no like, oh, I'm kind of disciplined. No, you're either extremely disciplined or you're not at all. And if you are, they're fantastic.
Yeah. I always prefer to use credit cards because, if a bad charge goes through or anything, the bank always goes after it because it's their money. And if something comes up that I need cash for, then I can delay the payment a month and pay some interest, but use that cash. But I always pay mine off before the interest payment hits every time.
Mm-hmm. Yeah. And like, to be honest, there is kind of a caveat to that where it's like, if credit cards is your only line of credit and you're working with a client, like a bigger client that, let's say, is like a net 30, credit cards are a great way to fund a deal, to make your payroll, to do all sorts of different things. And if you have to pay a month of interest, listen, if you're at 24% interest, that's 2% interest per month on 10 grand, you're looking at $200 in interest, right? If you're working with a bigger client that's going to pay you on a net 30, paying the $200 in interest is probably a pretty small fee relative to the amount of work and the amount of profit you're going to make. So that would be my only like caveat to extreme or zero discipline.
Okay. So yeah, I mean, like having all these accounts, seems like a big leap from going from like having one bank account for everything, business and personal, to having all these accounts. And if you're going to do this, you're going to have a bookkeeping software or something to keep track of all this stuff. So how do you recommend making that?
To be honest, at this point, if I was like one man show with an assistant, at this point, you don't need a bookkeeping software, right? It's literally, you have your primary income account. Let's say 10 grand goes into there. Come Wednesday, you're going to move money to OPEX, move money to owner's comp, move money to tax, move money to profit, all in your Chase banking app, right? You just transfer money to the different accounts. There is no extra software. There is no QuickBooks. There is no tracking the expenses, tracking income. There is none of that.
Well, how do you write off expenses if you don't track them?
I mean, again, that's where the bookkeeping and accounting comes in. I just have a personal belief. This is my own thing. If you're a 1 or 2 man show, I would not even worry about writing off taxes, because the amount of income that you're making is probably sub 250 to 300K. The amount of money you're going to be able to write off in tax savings is going to be less than the amount of money you would have to pay a good bookkeeper in order to capitalize on those, unless you're doing it yourself.
So you're saying don't write off anything?
I don't think it's worth it. On a small scale, some people are going to disagree, some people are going to agree. I just have a personal belief. It might be because I'm young, it might be because I pursue things aggressively. Tax savings is not why I'm in business. I'm in business to grow to $1 million, $2 million, $5 million company. And if I'm only at 200, 300K, my job's not to save money. My job is to increase my top line.
But you still have to write off all of your costs of goods sold. You're going to write off your gas, you know. It doesn't make sense not to write those things off.
Yeah, I mean, at this point, at this stage, again, 200-300K, at the end of the year, take your bank statements, take a day or two, whatever it takes, and you can see all of your expenses. You can export them, especially with Chase, export them into an Excel file, look at all your expenses, sum them up, send it in.
So that's another reason I use credit cards. Like, I'll use credit cards for every single thing. I don't pay cash, because that way there's a digital trail of everything I've spent, and I can go back and categorize everything, you know, once a quarter even. But I think that's super important. Like, you can't just not write off anything, because someone that's doing 300K, they're going to pay all of their profit in taxes if they don't account for all the expenses they had.
Yeah, I mean, account for your expenses, right? Do it. I kind of assumed people would do that. Yeah. Export your statements into an Excel
Never
file.
assume, man. We gotta cover uncover every rock here.
Go into your bank account, export your statements into an Excel file, sum up all of the expenses, boom, use that. But that comes with the caveat: no personal expenses are in there. The second you start commingling, oh, this was lunch when me and my wife went to dinner, or this is groceries, or this is this, or this is that, you're opening up a massive can of worms. I have business associates that don't believe any of this. They don't have a bookkeeper. They expense 100% of all expenses for their entire life. And if that's a risk that you want to take, go for it. I will say that those people don't run more than a $10 million a year business. So it depends on your goal, right? If you're fine not doing things by the book, just know you're not going to grow beyond probably $1 or $2 million at most. Like at the very most, and that dollar amount is going to be extremely stressful. When everything is done correctly and above board, when you start working with accountants and you start working with professionals and you start working with bigger clients that you can show that you have AR and you have processes and systems and everything is mapped out correctly, hitting $1 or $2 million is going to be far more simple. Your life at that stage is, your biggest stress at that point is going to be, did the materials get to the job site, and did my subcontractor show up, right? Everything else is covered because you've created a system for all of that. It's just babysitting. That type of low stress at 1 to 2 million, because you've done your groundwork and your homework sub those numbers, is what's going to allow you to get to that $5 to $10 million range, right? So
would you recommend?
Again, it depends on your goal. My dad, I would not recommend any of this besides the bank account thing for him.
Does he do his own bookkeeping?
No, he just does everything out of. I hate that he does it like most people, right? In a single bank account, people come in, come out, whatever. It's like it's just everything's out of a single bank account. And if I'm honest, I'm pretty sure I'm assuming he probably does it out of his personal bank account, which drives me nuts. But it's like whatever, dude. I'm just gonna let him do his thing.
So let's say that somebody is like brand new to this and this is like a whole new thing for them. Should they go talk to an accountant to help them set up their like expense categories and like get set up, or do you think people should just go straight to hiring a bookkeeper?
It depends on how much money you have to get started.
So how much does it cost to have a basic bookkeeper for this kind of business?
If you want a bad bookkeeper, it's going to be sub $500. If you want a good bookkeeper, it's going to be 500 plus per month. And what do I mean by good and bad? A good bookkeeper has multiple clients in this industry. A good bookkeeper is familiar with your business model, with the way that you're charging clients, with the way that you invoice. They're familiar with all of this, right? A bad bookkeeper has a car dealership, a small car dealership, a plumber, a HVAC guy, a marketing guy, clients. I'm talking about their clients, right? A karate coach, guitar coach, a tutor, right? Like they're just all over the place doing all of these different things. A good bookkeeper, what I mean by that is they specialize in construction. In this situation, they specialize in construction. Okay. They're familiar with the way that all of this works. So that's what I would say. And if you're smaller, again, dude, keep it simple. Like if you're smaller, just starting out, it's your first year, I would literally just do the bank account thing. Because what that's going to do is when you have some income and you can start to afford a good bookkeeper and you come to them and you say, this is how money flows in my business and I've been extremely disciplined in it. You are in the top 10% of preferred clients simply because you're organized, because everybody else that's coming to them is in are in the situation most people are in. They're using a personal account, whether it's a credit card or a personal bank account. They might have a business bank account, or they have a business. I'm not kidding. We had a guy that runs 7 businesses out of a single business bank account. Okay. If you came to me, if you came to me and you said, hey, I have 7 bank accounts. I have an income account. I allocate this amount of money to this bank account, this bank account, this bank account, and this bank account. At the end of the year, I pay my taxes out of here, and quarterly, I pay my profit distributions out of here, and my W-2 comes out of this bank account. Everything else runs through this OPEX, and I have not messed that up one single time. You are like a golden star on a silver platter, and I would love to work with you compared to the guy that's running 7 businesses out of a single bank account.
So that's what makes it easy for you. What's sweeten it up for the person who's thinking about all this stuff that they have to do that they haven't done in the 10 or 20 years they've been in business? Why should they change now?
You shouldn't change. First of all, if you're fine doing it the way that you're doing it, you shouldn't change. But if you are stressed out, because if you have ever had an extension in your taxes because one, you didn't have the money to afford your tax bill, like, listen, let's talk about taxes for a second, right? That's most contractors, or one of their biggest stresses is like, oh shit, I got this tax bill. Let's talk about that. You have had all of the income and revenue that you need to pay the tax bill, but you were too undisciplined and you were not serious enough, and you weren't treating this like a real business. You were being a hobbyist and not professional in order to keep that money to pay your bills. That is childish. Okay. It is unacceptable. If you've ever done that and you want to change it, you should do this. If you're fine with doing that, keep doing it the way you're doing it.
Fair enough.
Okay. That's number one. If number two, if you're not paying yourself consistently, right? Owner's comp. Could you imagine the stress of that most contractors have that say, yeah, I have money in my business bank account. Oh, we're going to go on a vacation. Let me just pull some money out of the business. Oh, mortgages due. Let me pull some money out of the business. Oh, I want to buy a new car. Let me pull some money out of the business. Oh, my wife's birthday is coming up. Let me pull some money out of the business, right? There's no structure. You're not running a real business. You're running crap. Like, I don't even know what to call it. It's a hobby, right? It's just like you're dicking around. But if you could run your own business and have the security of a W-2 where you get paid every 2 weeks, and you see a bank account that has 6 months worth of income for you, dedicated to you, regardless if you sell a new job, a new this, a new whatever, hire anybody, whatever, there's money in that account for you every 2 weeks. And you get a paycheck every 2 weeks. And that is the money that is allocated to you. How much less stress would be on you, your family? How well could you prepare to pay your mortgage? How well could you prepare to budget for your personal life, or to be able to show income so you can get a loan to buy a boat or a car or a house or whatever you want to buy, right? Qualify income to make large personal purchases. And oh, by the way, every quarter we're going to give you a little bit of juice because you're a badass CEO and you have your structure correct. And so, hey, by the way, here's a $10, $15, $20,000 bonus as a shareholder for running this company well, right? And if there is no profit, that's your fault as the owner, right? If you don't have any money in the profit account, that's because you are doing things incorrectly. But without it, there's no accountability. So you're just doing just fine. There's always money. We always have money for whatever we need. There's no built-in accountability to you, to yourself, to your business. Mm-hmm. And if you're serious about this and you actually want to run it as a business and you want to signal, is this thing actually profitable? You want to set this up. If you don't, keep doing it the way you want to do it. I don't care. This is your business. And the worse you run your business, the easier it is for all the good contractors to run you over and take your jobs.
Yeah. No, that's a good point. I've known of a lot of guys who work the whole year, and at the end of the year, they find out they didn't make any money. And it would be really nice to know that as soon as it starts becoming a problem rather than 10 months later. So
yeah, you want to know that in March so you can correct, or in December when you're like, shit.
So that was some good stuff. That was like some core fundamental, like account, almost like back end stuff. Let's talk about front end stuff for a little bit. So like at Kyle Construction, we use QuickBooks, like Contractor Edition. We put our estimates in there. So like I like to use Excel or Google Sheets to map out my estimates, and then I put them into QuickBooks. I'm able to send it to a client through a PDF or automatically out of the software. I can send them an invoice that matches. So like, what are your favorite tools, and do you have any thoughts on like best practices for that part of the business on the front end?
The first thing I want to say is everything that you just mentioned is not bookkeeping. And I don't say that for my sake. I say that for the understanding of a contractor. When you hire a bookkeeper, creating invoices and doing all this stuff that you just said, doing bids and creating all this stuff, that is not a bookkeeper's position. Okay. Mm-hmm. And I say that because I've seen a lot of people say, oh, I want to hire a bookkeeper. And then they'll complain that their bookkeeper is not doing all this other stuff. That's like hiring a contractor and expecting them to do the accounting, right? Yeah, it's still in the office, but it's like simply not the same. It's not the same at all. Mm-hmm. If you're smaller, QuickBooks is perfect, right? You can do all of the bookkeeping within QuickBooks. You can create the invoices within QuickBooks. You can put your own personal brand, logo, all this stuff, message in QuickBooks. To be honest, I don't have a ton of experience with specific project management tools outside of what our clients have used and what we've gone in. And I've seen Jobber.com do a really good job. That was for a plumbing company. I actually really liked the way that one was done. If you're doing
What
new
did
home
you
builds,
What did you like about Jobber? Talk more about that.
I like the way that you could do your estimates. It was super organized. You could delegate tasks. You could upload pictures. You know, your project managers could upload pictures, or if you're on the job, you can upload pictures. Um, I don't know a ton about the features that it had between the client and the company. Like, I don't know if the client had a login portal to see like anything.
Hmm.
I am, if I recall correctly, they could um, they could send their invoice or their bills through Jobber, and with that, they would have their projection, right? They'd have their bid, and then as the money came in, let's say it was in a 2 or 3 phases, it would show like what percentage of the money was still owed, what wasn't, if they were over or under budget stuff. That was really cool. Again, I didn't play too much of it between like the contractor and the customer, like the front end stuff. But from the little
Hmm.
bit that I did see, it was pretty cool. New home builds, if you're doing new home builds, it might work for people that do renovations. I don't know. We've only dealt with it with new home builds. That one was called, um, it just blanked. Hold on. I want to pull it up.
No, that's cool about Jobber. I have a couple clients that use that, but it's really handy to be able to see like how much money how much money has come in versus what's expected from the sales you've already made. And like even for really small contractors, I think it's good to start using these tools, especially if you want to grow your business, because it's really easy to figure out when you have like one job or just a few jobs to keep track of. But then as you grow and you get to the point where you have 20 going on, you're not all of a sudden like pulling your hair out like, how do I manage all this? Like it's just something that's scalable from the point you start using it. So with today's technology, I highly recommend like looking into these tools, do like free trial, find one that you like, experiment with them, and find one you like and use it, because tracking is the one thing I see most people not doing, whether it's finance or project management. And it's like the most important thing. If you're not doing every single thing yourself, then you need some kind of system to track it, so it's easy to know what's going on, even if you are
Well,
doing all
even if,
yourself.
yeah, go ahead. I
Like
was going to say, if you are doing
you
it
can't
yourself, you
remember
need to start
everything.
tracking it. Well, you need to start tracking it so that you can create a system.
Yeah, yeah. So like a lot of our clients and a lot of my viewers they're young guys just getting into business. They're ambitious. They really want to grow and scale things. So, to people our age and younger, like we grew up with technology. There's probably an app on your phone that you can do all of this stuff on, and you can for a lot of things. Like I was just talking
Let's
to James the other day, and he wanted to be able to give estimates while he's on the job site. Like these softwares and apps can do that and make it really easy.
Oh, 100%. And let's talk about that, right? Like as a young guy, because I mean, we're both relatively young. We've been in this business. For you, how did you divvy up your time between like doing the work, running the jobs, picking up materials, delivering, like all the stuff that had to happen to get jobs done and bid on jobs, and then the business side? Because for me, I would do like depending on what time in the morning the crew would start, like between 6 and 9 a.m., I would start. Some days it would be 10 or 11 because I didn't really have to go to the job sites until like 4 or 5 p.m. After that, by then, most of the workers, they're home, they're already drinking beer or at the kids' baseball game or whatever they're doing. So I would take an hour or two in the evening to either document or track what happened that day, how we made it happen, and then um, start building the system, right? Like like on some projects, why did we do paint before flooring? You know what I mean? And it's like, what were the pros? What were the cons? What was the frustrations with this, that, and the other thing? And just over time, doing that for an hour or 2 hours a day, and that during the weekdays, And then on the weekends, I would set at least a cumulative 6 hours aside between Saturday and Sunday to work on the business and not in the business, right? To set up, to schedule the appointment to go meet with the banker, or to look at reports, or to set up a project management system, or to source and find material, right? It's like saving me $50 on fans or whatever. It's like, yeah, that times 400 fans that I'm going to buy this year is going to save me a lot of money. So, doing those types of things. And then there are small things, right? Like if you're looking at creating a system, when you're doing that, just start super simple, like literally have a spreadsheet. And the easiest place for most people to start is materials. What materials did you need today? And just make a list of all of them, export them out of your project management thing, look at the receipts, whatever you have to do is make a list of all of them, put how much you paid for them, and then can you find it somewhere that can either get them to you faster or for less expensive or higher quality, right? And then have 2 or 3 options, right? What's your cheap grade? What's your middle grade? What's your high grade? Because now as you track the expenses of the materials, now when you go to bid jobs, order materials in the future, when you do a $1 million house, it's like, yeah, we're probably going to use higher grade material. Here you go. This is going to cost you more money, but here's why you should do this, versus, hey, we're going to use contractor grade materials because it's a little rental house for one of my real estate clients, right? So you have those set up. And then you have your time on job, right? What are the total man hours that this specific job took? What was involved? Everything from showing up to the job site to digging to, if you have to cut stuff up, or maybe you have to go in the attic or repair drywall, whatever the case is. Like, what is the step-by-step process that happened that day? How much time did the overall job take, and how much time did each step of that process take, right? These are the things that I look at when I'm working on the business, not in the business. And it's boring as hell. It is not sexy. It's not fun. It's not something you can go to the bar and talk to your buddies about and be like, oh, I sat down all day and I mapped out how long this job took me and how much money the angle stops freaking cost and where I can get I did all this stuff. And you're like, cool. Like, I don't care, right? Nobody's going to know. Nobody's going to care until you take that next step to hire somebody where you can say, hey, I have a sales guy that's bidding jobs. This is how long each type of job takes. Boom, they can do that job bid on the job within 30 minutes or 20 minutes. Now I have an admin person that has a list of materials based on the job bid. Boom, order all these materials, get them ready. Boom, we have guys ready for this day. It's going to take 72 man hours, which is, 3 days of one person working 24 hours a day, which is impossible. Break that up into 8-hour days. Okay, that's going to be a week's worth of work for 2 people. Is this a job I can put 4 people on and get it done in 2 days? Because now I don't have, right now that time doesn't cost me as much. I can get it done quicker. I can get paid faster. How much, that's so working on.
So yeah, you're talking about spending dedicated time, just kind of tracking everything, documenting it, thinking about it for next time. When you posed a question like, how did you divvy up the time? Like, I always, because of the situation of working on the job during the day and then having to do the other stuff either in the morning or the evening or the weekend, like nobody wants to do that. And I think that's the main reason why so much of this stuff falls by the wayside, is because you get home at the end of the day, it's late. You'd rather just have a couple beers and go to bed, hang out with the family, rather than like sit there and put a bunch of crap on your spreadsheet or your bookkeeping software. So when I was doing construction full time, I was always trying to make it so that I could do this stuff on the go when it happened. Like when an expense came in, take a picture of the receipt, put it into the thing, press OK. Now it's already categorized. I don't have to do it later. I can forget about it forever. And so, I was always trying to find ways to do that. Like go estimate a project, be able to put the stuff in on my phone, tablet, email them the invoice, maybe even get the payment right then and there, get them on the schedule so that by the time I'm driving away from their house, like all the work associated with that is done already. And if I was doing construction full time now, that's what I would be doing. I would be trying to figure out how to do as much stuff on the go in real time as possible so that I wasn't creating this mountain of work to do later.
That's
And
also a really good way to be speedy and to make sure it's done while it's fresh, accurate information, and your customer or client's going to get stuff from you quickly, right? Speed wins. Speed wins
it's
in this
better
game.
for everybody. And like what we have it to the point where we only go see new customers on Friday afternoons. The calendar that we have like a calendar set up, they can schedule the appointment themselves. We just print out a list of all the appointments Friday morning, print out the map because my dad's old school and he's the one that drives around. He'd rather just look at a map and drive there. And never had anybody complain that we weren't available 24/7. So that's another thing is you don't have to be available every single day to do estimates. Make it convenient for you. If you don't have any work, well, then do estimates every day. But if you have a full schedule, make it dedicated time for those. Same with
that's a good point. Because seasonality matters.
Sorry, I said just if you can't do your bookkeeping in real time, like dedicate time to do it.
Yeah,
that's
100%. But to that point, I think that the seasonality matters a lot, right? Because what I'm talking about, dedicating 6 hours on the weekend, like do this for 90 days. Work on the business for 15 to 20 hours a week for 90 days, right? Sacrificing your nights and weekends freaking sucks. It sucks to ask, especially if you're married and have kids, right? It sucks to ask them to make that sacrifice. Hey, I need to focus on this while you guys are doing X, Y, Z. But do it for a season, right? It's not a forever thing. And that's something that was in my head that I didn't realize is like, man, I'm just like never going to hang out with friends or like ever go on trips or like ever do anything ever with anybody outside of my business. And that was like a mindset that I had. But if I dedicate, even if it like whatever cadence works for you, right? If it's for 2 weeks, I'm going to dedicate 10 to 20 hours a week to work on the business, to create the processes, to set up this app, to set up the project management software, to set up the bookkeeping software. Because listen, it's not going to all happen overnight, right? You create your list of everything that needs done. Pick one thing on the business that's going to get done and created that you're never going to have to create again. Create that this week. Next week, create the next thing. Next week, create the next thing. Next week, create the next thing. And over 90 days, you can literally transform your business in 90 days. Like imagine if the first week you're like, okay, I just watched this live call with Matt and Chuck. This week, the only thing I need to do is set up my bank accounts and get them properly funded. That's it, right? Boom, work on that. The next thing I'm going to do, the thing I'm going to do next week is I'm going to set up a project management software and make sure that I'm at least in it and that there's some sort of flow, right? There's like at least bidding, prepping, executing, and then getting paid, right? We're at least going to get those set up in the project management software. The next week, I'm going to create my spreadsheet of all the materials that I have. And I'm going to find the cost of everything and source them and figure out their availability. And then the next week, I'm going to figure out how many man hours each type of project takes, right? And if you just dedicate one of these items every single week and you just chip them away over 90 days, 90 days is what? 12 weeks? If you got 12 of these building blocks done over the next 90 days, objectively, you will transform your business.
Mm-hmm.
And 90 days is fast, right? Like 90 days is like the difference that just doing that would make over 90 days. Like I mean, a lot of people have been in business for 20 years. The only problem is they've been in the same business for 20 years. They haven't improved it. They're going to make somebody watching this that's been in this business for 20 years that takes the next 90 days to do exactly what I just said is going to have a completely different business over the next 12 months than they had the last 20 years.
Mm-hmm.
They'll be
Definitely.
less stressed. They'll be able to delegate more. They'll be able to make more money. They'll be more organized. They'll have a better marriage, probably have sex more, right? Like they'll have more free time. But it's going to sacrifice you. In the short term for those 90 days, you're going to have less free time. You're not going to be able to pay as much attention to your friends or family or whatever, right? There is a sacrifice. You have to pull back for those 90 days in order to spring forward, right? It's kind of like a rubber band. In order to shoot the rubber band, you got to pull the rubber band back. It's going to get stressed a little bit, and then it's going to fly forward. And that's the idea that I'm recommending here.
Yeah, well, and I think, if you're doing things really inefficiently right now and you're putting things off and your books are out of order and you don't know what's going on, like that's all costing you a lot of time every week anyway. So chances are, if you do get these things set up, it's actually going to end up saving you a bunch of time. You probably get your evenings and weekends back, be able to hire help and properly show them how to do their job, understand what they're doing. I think a lot of people just get hung up on starting a lot of this stuff. Someone might be thinking about getting their account set up for 10 years and never do it, even though it's something you can go do in one appointment at Chase.
I have a message for those people. You're lazy.
Well, it could be a lot of things.
It.
They could be afraid. They could be, prioritizing something else. But at the end of the day, like there's a lot of things that we've all done where we're like, we put it off for a long time and then we do it and we're like, that only took me an hour. Why did I wait to do that? So I think what you're saying is really cool, because these things it doesn't take a whole bunch of time to like set up some of this stuff. And if you do that every week for 12 weeks or however many weeks, like even doing one of those things properly will make a big impact, because it impacts everything you do from this day forward.
Mm-hmm. So, and I would even recommend, with that note, like don't do more than one. If you watching this, today's what, Thursday or Friday? Yeah, today's Thursday. If you're like, okay, starting between Sunday, this coming Sunday, and that Saturday, I'm going to set my accounts up and fund them properly. If you do that, don't worry about, I mean, obviously you still have to run the business and do all that other stuff, but don't worry about setting up the project management software. Don't worry about creating the invoices on QuickBooks or setting up QuickBooks or your chart of accounts or any of this stuff. Just do that one thing and then keep doing things the way you were doing outside of that one change that you made, right? And then the next week, pick that one thing and don't do more than that. If you're like, man, that only took me 15 minutes, cool. You get the rest of the week to work, to do invoices, to do bids, to make sales calls, to hang out with your family, like whatever the case is, you get the rest of the week to do that. But then the next week, maybe something takes you 10 hours that week to do it. That's okay. That's a sacrifice you're willing to make in order to streamline your business for the next 10, 15, 20 years. But don't try to do 5 things. Oh, that only took me 10 minutes. Oh, this only took me an hour. Oh, that only took me 5 hours. I got 3 things done there. Okay, cool. But now you've burned yourself out because you've just made so many changes, made so many decisions in a 1 week period that your brain can't wrap its head around what just happened. And you just, like, every change you make has a ripple effect, right? It's going to cause some sort of small problems that you're going to have to figure out. And making 3 changes that quickly will cause too many small problems that you're not going to understand unemotionally why those problems are happening. And you're going to say, oh, F this, I tried doing all these changes and it just made everything way more stressful. It's because you made too many changes too fast. Don't do that.
Mm-hmm. Yeah, that's a good point. I think it's easy in today's world to want like instant gratification, to want everything to happen all at once. But I think if we all ask ourselves, like, are we in it for the short term? Or are we in it for the long term? Most of us are going to say we're in it for the long term. Like, we're here to have this business for 5 years, 10 years, 30 years. So making it incrementally better will drastically transform it in 12 months or even 90 days. But trying to do everything this month will probably just cause you to end up staying in the same place because you get burned out, overwhelmed, things break.
You know what I realized? The way that I figured this out and the way I was able to make it sink into my brain was in 10 years when I tell this story. Yeah, about 3 years ago, I doubled my business from year 5 to year 6. And then from year 6 to year 7, we were stagnant, but we built all the fundamentals. And then from year 7 to year 8, we doubled again. I'm fine with that, right? But what it made me realize is being in the storm is that those 3 years that I just talked about are built from minutes, hours, days, weeks, and months, right? I'm not expecting the change to happen in a month. That's like, right? Like even the allocation thing with the bank accounts. Okay, cool. You set them up this week. In a month, you're only doing 2, maybe 4 allocations. Like it's not enough time to like build that muscle. Oh, I went and did bench press this week. Okay, cool. I'm still out of shape. Like you have to do it multiple times, right? And the time of instant gratification goes away when you're like, oh yeah, I built this company in 3 years. That's pretty impressive, right? Like to build a company and have it sustaining in 3 years is impressive. But if you go to somebody and say, oh yeah, I built this in 3 months, they're like, that's not possible, right? Like it's not possible to build $1 million company in 3 months. Maybe for somebody, but if you're watching this, it's because it's not possible, right? Like you have not done it, therefore you don't know how to do it. So it's like not possible in your reality. But I would say that like just keep your time horizons like at bay. Like you went to high school for 4 years. Think about the amount of change that happened in 4 years while you were in high school. Your kid from year let's say year 10 to year 14, from 10 years old to 14 years old. How much change do you see in them? A lot, dude. From 14 to 18. Like it's an insane amount of change. How much change do you see in them from January to February? Nothing. Right? Like, I don't know why we get into business and we're like, oh, we just forget time horizons. It's like, no, like 4 years is like, you went to high school for 4 years and you learned freaking calculus or trigonometry and you could barely do algebra when you got in there.
Yeah. Well, there's that saying that people overestimate what they can do in 6 months and underestimate what they could do in 6 years. Mm-hmm. Right. And it's easy when you're caught up in the weeds to look at everything like, oh, I gotta pay my bills. I got to get this payment from this customer. Like it's all those little baby steps. So the time that you're talking about putting in the business is a time to like kind of step back, look at the long game. And like, if you see the little progress bar going up, even just a tiny bit, like you're headed in the right direction. That's kind of how I view everything now. It's like, are things going in the right direction? If it's just like one microscopic step in the right way, like I'm happy. And because if we just keep doing that over and over, like we're going to get where we're trying to go. But if you're not moving in the right direction, do something about it now. Take a baby step.
And I would say like something that I start with when I work with people is the first 2 things I want you to do. I want you to write down all of the problems that you've had in the last 30 days that you can conceive, right? That you can think of. Did you argue with your spouse? Did you stay up late at night thinking about XYZ? Did you have to extend your tax bill? Did you have to miss going to a birthday? Or did you have to work late? Or did you know like what problems? I don't care, personal, business, did you make payroll? Like I don't care if it's personal, business, write them all down, comprehensive, like all of them. Did you want to go to dinner one night and it's like, oh, that was $100 dinner or $100 a plate dinner, and it's like, yeah, I couldn't afford that. Or you know what I mean? Like, did you miss a rent bill or a credit card payment, or did you have to extend the credit card payment because of, it doesn't even matter why. Like, I just missed a credit card payment. Like, whatever the situation is, like, write all of them down. And then what would it be like if that was solved? Right? Like, what if you came home and your wife was like, "Hey honey, I made you dinner." Like, fuck, that's awesome. Right? But like, that's the type of relationship. Like, you have to get clear on what you want. So, and I start with problems because those are the things that are at the forefront of our mind. Then you get clear on what the ideal situation is. I call it ideal scene. So you can bitch and complain that when you get home, your old lady doesn't crack you a cold beer or whatever you want to complain about. But it's like, what would the ideal scene be? Hey, when I get home, I would like you to have a beer in the freezer. And when I get home, you say, "Hey, honey," you kiss me on the cheek, you crack a beer, and you hand it to me. That's not unreasonable to ask of your spouse, right? It's like, cool. But on the flip side, maybe she wants more security that you have consistent income from your business that you started 3 years ago and it's never had stability, and you're working late and you're working weekends and you missed your kid's birthday. That's a fair trade. Hey, honey, I'm going to work on this business for 90 days. In return, starting 90 days from today, I would like for when I come home, there's cold beer in the freezer. You crack it when I come home. You give me on the a kiss on the cheek. You say thank you for working hard all day. In return, we're going on a date night every night, and I'm going to pay myself on a W-2 every 2 weeks, and we're going to make sure that our household is stable. That's
like
how you
that.
solve your problems, right? That's how you make meaningful impact.
Very cool. Hey, we got a little bit left. Can we go full circle and go back to the piggy bank picture? And can you tell us, like, how do we allocate and how do we make those percentages, and what do we do when we have the account set up?
All right, let me pull that up. Okay, so allocation day is called allocation day. And then every 2 weeks, I would start with, again, depending on your business, every week or two. Do it on Wednesday, pay your bills Friday.
Can you share the piggy bank picture again?
Yeah, I'm pulling it up right now.
We want to see your beautiful illustrations.
All right. This one right here. Cool. Can you see it?
Yep.
All right. Perfect. So I would do this allocation from income into these accounts on a Wednesday. Ideally every 2 weeks, if you need to, every week. And I would pay your bills on Friday. That means that you need to tell your subcontractors or your workers they are not getting paid Tuesday afternoon after they finish the stucco job, that they're getting paid. Okay? You get paid Friday. So do the allocations Wednesday, pay your bills Friday.
Okay.
What was your other question?
Well, you've got percentages there. So how do you decide, like, what percentage goes? You get your 100% of the income goes into one account. How do you decide how much goes into all the others?
You're asking for the sauce now.
We want the good stuff.
The good stuff. Let me go to. This is the good stuff. I've been laying nothing but good stuff. I gotta find it. I don't have it. I don't have that readily available for people for a reason. Here we go. All right. All right. You're going to have to pay me double now for coming on here and showing you this.
All right, will do.
All right. Boom. All right, here you go. This is the secret sauce. So let's start at the top. 0 to 250K. This is annual income. 250 to 500, 500 to a million, million to 5, 5 to 10, 10 to 50. If you're watching this right now, you're probably in one of these two categories. So 100% of that real revenue goes into the income account, and then profit 5 and 10% go, or 10% goes in that profit account. Owner's pay 50 to 25, owner pay, tax 15%, operating expense 30 to 40%. My only caveat with these two right here, because these are the biggest jump from 50 to 25, 5 to 10, and then 30 to 40. My only caveat with that is like if you're at like 200K and you plan and your goal is to get to like 300K plus, right, in this range, make a little bit of a sacrifice and make that transition. Pay yourself maybe like 30%, and then pop this bad boy to 40%. That'd be my only caveat right here. Is like this transition from 0 to 250, 250 to 500 is you can be willing to pay yourself less to make that transition, because sometimes that extra little bit of OpEx is what allows you to get more jobs, hire somebody, XYZ, in order to hit that 500K. But don't go down to like 20%, right? Like do not go below 25%. If you cannot pay yourself at 25% of your revenue being owner's pay at this price point or at this revenue point, margins get worse as you get bigger in general, right? And the reason for that is because you have more overhead. At 0 to 250K as a contractor, you can work out of a truck. 250 to 500, you're probably going to need an office, right? You're probably going to need an admin person. You're probably going to need another employee. You're probably going to need some sort of something somewhere that's going to cost you more money. As overhead increases, you're going to hit this point, right? You're going to be profitable, and then you're going to hit this point where the overhead is going to be a higher percentage of your revenue as you make that jump into more overhead infrastructure commitments. The nice thing about some of that overhead expense is it becomes linearly less percent as revenue increases, right? If you sign a lease for $3,000, the lease is $3,000 whether you're making 500K or 3 million, right? So you are going to hit this point of like, oh shoot, which is why you see, right, this profit is 5, 10, and it actually jumps up to 15% and then drops down to 10%, is because this right here is going to be, for most businesses, their highest profit margin point. And then that 1 to 5, it gets kind of slim, because you do, in order to get to 5 million, the amount of management that most businesses need and the amount of infrastructure and capital and overhead, it is significant, right? I mean, you're going from 50 to 65% of your revenue is spent, but it stays like that the whole, like it doesn't change after that. So that's the percentages explained.
So this is a good place to start. If you're setting up your accounts, you can start with these numbers, think through it if they make sense for you. But why does the owner's pay drop to 0 at the highest category?
Bro, do you want to be running your own company at 50 million? No, bro, you're going to hire a CEO and pay him $2-3 million to run that. And it's going to come out of OpEx. You're going to be a shareholder of the company, make 20%.
That's the dream, right?
That's my dream. I don't want to get paid as an operator in my company. Like, dude, I want to pay somebody to manage the company. That's why at this level, we want to set up all of the systems and processes to get us to this level, systems and processes to get us to this level, management and systems and processes to get us to this level. Probably some sort of investor and strategic relationships to get us to this level. Probably some sort of high-level CEO with a board of directors and better processes and better systems and better management to get us to this level.
Mm-hmm.
Right? And at that case, dude, I don't want to deal with freaking board of directors and all this other baloney. I just pay me my paycheck for investing and starting this company 20 years ago and run the damn thing.
Awesome. So yeah, that chart, it's kind of like setting, it's kind of like thinking long term, is like you're setting yourself up for the next stage. You're always doing things the way that you'll do them at the next stage when your company's bigger, when there's more people involved, more overhead. So it's almost like you're practicing for the big leagues. Like do things the right way from the beginning, and then you won't have to change them. You won't have to spend a week reorganizing your books ever again, because you did it once and you're done. So this is like the one and done method, in your opinion.
Yeah, I mean, you will have to revise a couple things every now and then, right? Like whether there's a software update or, you're going to have to make some changes here and there as you grow. Maybe you're going to start with a smaller, cheaper, less expensive, less robust feature project management software. And then you might have to change project management software, right? Like there are going to be some small changes that are going to happen over the course of your business's career, based on vendors, based on just industry improvements, best practices, stuff like that, your growth as an individual. Like you buy a pair of pants, when you're working out, it's like, yeah, you're going to have to buy a new pair of pants. Like, yes, these pants will last 50 years if you take care of them. But like you're also losing weight, so you need to, get some smaller pants to fit you. So we're going to make some changes.
Sure.
So, but in general, you hit the nail right on the head. You're starting in the minor leagues. You're starting with high school baseball, and you're going to work your way up to the majors. And every step, awesome. the way that all of this that we've talked about is created is you're continuously mastering the current step to prepare for the next step. I actually read a really good quote. This just came to my mind, and I would like, maybe, I don't know if we're done, but I would like to leave this for the people that have made it this far, is that the competitions that are best played, the ones that are most worthy of playing the game, are competitions that cannot be won or never end, right? Marriage doesn't end. There is no end goal. You don't get scores. You don't get touchdowns, right? That's not a thing. Business is similar. Your job is to stay in business. And in business, if you're not growing, you're dying. So that's my take on all of this, right?
Awesome.
We're in a race that's not going to end. So just keep fucking running.
Love it, man. Well, thank you so much for coming on my channel and sharing all your info and your thoughts and your ideas. It was really valuable, and I appreciate your time.
Yeah, absolutely. And if anybody wants, anything else, needs help with anything, they can follow me on Instagram. It's just the Matt Beans, just like my thing right here is all inverted right here. At the Matt Beans on Instagram, probably the best place. I do have an email deal just for people really close to me, at mattbeans.com. You can subscribe to an email, and I just kind of update you on my life and some business practices that I've learned, lessons I've learned, philosophy, mindset stuff. So, but yeah, man, keep following Chuck. He's a beast. He's doing good things for contractors, helping them grow. And as long as anybody watching this does some of the stuff that we've talked about, they'll be able to handle more business, which Chuck is obviously a master at bringing you guys business. So this is kind of the back end to be able to fulfill the business Chuck brings you.
Yep, exactly. Awesome, man. Well, thank you so much. And see you in a couple of weeks when I hit up Tennessee.
All right, come on out. We've got a bed ready for you.
All right, man. Sounds good.